Hey, welcome back to Everything Money. We're glad you joined us again. We are here to offer a contrarian view on some of the investments you might be investigating out there on YouTube. We're kind of rare, Paul. I don't see a lot of channels like us saying this. If you scan YouTube with an interest in Lucid Motors, you're going to get a lot of exploding thumbnails with people with their O faces saying how this is going to be the best thing ever, along with the family of tons of other EV car companies that they're going to say below in the comments that they're more than a car company, even though that most of them, 90 to 95% of the revenue comes from automobiles. But regardless, we're here to show you our thoughts on possibly investing in Lucid. If you don't have a process, say you're new at this, regardless of your age, and you just started investing, the world may lead you astray into thinking that Lucid, especially after its merger with CCIV and some of this, some of the hype YouTube channels, what they're telling you is you might think this is a wonderful buy. The only way is up, and the stock price will absolutely skyrocket into a 10x banger. All of this may not happen, and we'd love to give you our thoughts on why. In general, Paul, this is a 14-year-old company.
14?
Yeah, it's a 14-year-old company founded in 2007, Lucid, and it was sort of laying under the weeds. I don't actually think, Mo, they have an incredible amount of cars.
Not yet.
If you're here to learn all the news about Lucid, just go to some other YouTuber who spent 10, 12 hours, just reciprocating facts to you. But in general, like if you want to invest in this, we offer our opinions and perhaps our advice. Paul, in general.
Well, one thing I want you to say is, what I want to say real quick, he said facts and our opinions. They are not using facts. Their facts are Lucid has 5 letters in the name.
I guess so.
Lucid is planning to make cars. Are these facts? Yes. Do they matter? I don't know. What matters to me is when I look at a company, so this is the way I look at Lucid. Lucid is the high school baseball player who's a top prospect who you are going to pay $30 million a year to as a high school player because he could be the next Mike Trout.
We had a mutual friend in high school that was the top prospect in Ohio, got signed to the Pittsburgh Pirates, was the best thing to ever hit baseball. And it didn't quite pan out, but he certainly didn't get paid an exorbitant amount of money. So what Paul's talking about is the current valuation of a car company that doesn't actually produce much of anything at the moment. And so you might be asking, should I be investing in this, Paul?
Well, it's exciting to see that the stock goes up and down. But the way I like to look at investments is, let me find an established business that's been around for a long time with consistent revenues, consistent profits, because Warren Buffett and Charlie Munger always say, we will not invest in a business in which we can't project out the next 5 or 10 years with reasonable confidence how much money they'll make. With Lucid, I think they just started generating revenue this last quarter. It was like 300 grand in revenue. Mm-hmm. And the company is what? What's the valuation of Lucid?
$36 billion.
$36 billion.
I don't even think they have I know for a fact they don't have a car on the road unless it's a prototype or you can go to your testing center and try it. No. You can go to their testing center in California and try it.
We own 2 houses in Mexico that do $85,000 a month in revenue. They do $300,000 in a quarter, so a little bit above that. So are we a $40 billion company with 2 houses in Mexico? I mean, that's why. Now I know that's an extreme example.
Is it though?
It is, because Lucid has a much higher potential than we do.
I guess. Yeah.
But to be a $36 billion company in the car business, let's look at it this way. Let's look at Toyota. Toyota is a $245 billion company selling for 0.9 times revenue. So what that means is if you take revenue times 0.9, if Lucid's 36 billion, what do they have to do in revenue comparable to Toyota? That means they have to do basically $40 billion in revenue. Lucid did 300,000 in 1 quarter. And we want them to do 40 billion to justify that revenue. Now you might sit there and say, Paul, you don't get it. They have so much potential. Great. So let's say they do $1 billion in revenue. Are you all of a sudden going to multiply their value that much higher? Now it's a $4 trillion company or $40 trillion company. You have to at some point draw the line and say, at what point do we look at it and say, this is a car company. They make cars. So until they can figure out a way to make cars at a much higher profit level, which they're not going to, because even Tesla, if you add in their government check that they get for selling the Teslas, they still make, if you take that out, they make about what the other car companies make per car. And Tesla's supposed to be the big innovator and all that stuff. Now you have Lucid. Now you have NIO. You have all these other car companies out there that are just selling for exorbitant valuations. If that makes sense to you, by all means buy it. I asked you to go back in time, look at companies from 2000 that were all internet companies because they had all the future ahead of them, and how many of them are currently broke. There's only 3. If you bought all the internet companies in 2000, you would have grown 3% a year from 2000 to now, when the market did 6.7 or 7%. And of that 3% per year, 80% of it came from Microsoft, Apple, and Amazon. Microsoft, Apple, and Amazon. And Amazon went down 96% before they went from $113 a share down to $6. And if you even think that right now that you're going to tell me you would have kept Amazon all the way down to $6 from 113, you are insane. You would have never done that.
The most popular comment we get, whether it's in our community, a message on our Instagram, or just a direct message on a YouTube stream, is I saw your video about someone like Stock Mo or Meet Kevin and their evaluations. I saw your reaction to this, and then I finally found you guys. We certainly know that we're a smaller channel. Paul, if you could see my screen right now, this is Stock Mo. Unfortunately, a very loud voice in the investing. He has an endless.
Go up to the top.
Endless.
You know how loud his voice is? He's been stuck in the low 500,000 subscriber range for a long time.
Endless amount. Mo, look at this. It just keeps going. These are all the videos that he did on the CCIV.
Yeah, I remember
Lucid merger. It just he keeps talking and talking and growing and building. And sure enough, this was a laughing stock when this thing went public back in earlier this year.
Seth, is there a video? I mean, he was probably talking about it on February 21st when they hit the high of intraday high $64.86.
There it is.
So it's right here. So look at this. It was nothing. Shot up all the way down here, and it's $23 a share now. It was as low as 10, as high as basically 65.
It was.
I bet he was saying buy it up here.
There's no reason whatsoever for the fundamentals that you should be paying even $23 a share for Lucid. Let them go become a successful company.
Why is that so hard for people to do, Paul? This is
because they want to hope for the future.
They want to catch the very bottom, and they want to exit at the very top.
They think they're going to be the ones to get that right. And guess what? If you get it right once, that could be the worst thing that happens to you, because you'll think you'll always get it right and you'll lose even more money. That's what happens in these bull markets. They suck people in. You feel like you can't miss. And all of a sudden you start missing. Oh no, it'll change. And eventually you'll end up losing a lot of money. Guys, it happens in every bull market top ever. Whether it's real estate, stocks, cryptocurrency, whatever it is, it happens in every single asset class that has a major bull market. Now you might sit there and say, oh, you stodgy investor. Then I'm a stodgy investor. The funny part is every best investor of all time that lasts decades and decades and decades thinks this way. I always tell people, tell me a .com fund manager who's around today. I'll wait. They're not around. They're not around. They do not exist anymore. Guess who does exist? Warren Buffett, Charlie Munger, all these guys who were told they were boring. Guess what? 99, 2000, they're too old. They don't get it. They don't get the new economy. Okay. I guarantee Cathie Wood will not be a known investor in 10 or 20 years. She might still be successful, but she will not be what she is today. Why? Because she's going to end up being wrong. At the end of the day, these car companies are still car companies. You might sit there and sugarcoat it any way you want. No, we're tech. Guys, if that's the case, then the manufacturers of Windows are tech companies. They still use technology in their factories to make Windows. That's just, we don't sit there and justify it by saying it's tech because they use technology. That's not tech. I look at it saying, how do they drive their revenues from selling cars? Are their profits in the cars pretty similar to everything else? Yes. Okay, then they're a car company. That's it. They're a car company.
Yeah, like all the other EV companies that have either already come and gone, like a Workhorse, or what's the other one? Nikola.
Yeah.
Based on very little actual fundamentals or actual cars. You know, Paul, you mentioned crypto. It's somewhat similar. You know, our boy Graham Stephan and Andre Geek today, this week, they both did videos on this new Shiba Inu coin, which is this week's talking point. It's going to go up 25,000% apparently in some people's minds. And it just, why do I bring it up, folks? They're along similar paths. You know, it's sort of clickbaity material that can't lose. And we get tired of it here. If you're sort of tired of it, if you made bets on this CCIV merger in the past, or all the other EV companies that aren't doing well this year, or all the cryptos that these people are pumping. And then this sort of speaks to you, maybe looking at numbers, making a very...
Why do numbers matter, Seth?
Well, that's the hilarious part, Paul, is I was in the tub this morning, Mo, like I always am, and I thought to myself, prior to actually making vehicles, they want to talk about how wonderful new investors want to think how wonderful this company is going to be in the future. And then when they actually start making cars and numbers do come out, they get even more excited.
Yeah.
So it does come down to, then they argue, it's like the numbers don't matter. And then when the numbers come out, now all of a sudden it's great, right? Tesla's beating earnings and Tesla's making more vehicles. So
yeah, but why do numbers matter in terms of any investment?
Well, you tell me.
Every investment is the present value of all future cash flow. If I told you right now that I was going to give you this stream of income for the next 5 years, how much would you pay for it? What you're doing with Lucid is you have no idea what the stream is going to be, and you have no way of gauging it, and they're asking you to pay $36 billion. We have no idea what the next at least with a company like Microsoft, Apple, Google, all these big companies that have been around for 20, 30 years with track records, you can sit there and say, okay, we can get a general idea of what they're going to look like in the next 10 years. Way better than we're going to see what Lucid's going to look like in the next 10 years. I wouldn't be surprised if Lucid's gone in the next 10 years. In fact, it's probably very likely Lucid's gone in the next 10 years. So if you go invest in the next 10 companies that you think have potential like Lucid, there's a good chance that 9 of them, if not all 10, will be gone in the next 10 years.
First time I saw Lucid was 2018. And if you really think about where Lucid is as far as putting cars on the road,
yeah,
it's still kind of a concept. I
mean,
no,
of course it's a concept. You know how I know it's a concept?
They don't have any cars. Revenue. Well, yeah, and they don't have any cars.
Their revenue's $300,000 in a quarter.
Why didn't you do this back in 2018?
Guys, I make more dividends per quarter than, I look at it going, this is insane. But to you out there who are looking at me saying, this guy is really, really stupid. Great, I'm very stupid. And in a few years, my bank account's going to be here, yours is going to be here. And I'm going to look at it and go, who's stupid then? And I really do, but listen, history has only shown that. Now you might sit there and say, well, you were wrong about Tesla. Somebody wrote a comment, when are you guys going to finally admit you were wrong about Tesla? The only company that I've been wrong on is Amazon. Because Amazon grew at a much faster rate. When I said they were worth, when they were $300 a share, I said they were worth $50 to $70 a share. Now I think they're worth $1,200 a share, and they're selling at $3,600. But guess what? I was wrong at $300, but I still don't think I'm wrong at $3,600. Now, if this market keeps going for another 5 or 10 years exactly the way it's been, I will be even more wrong on Amazon.
And just because the stock price is where it's at doesn't mean that you're wrong about the evaluation of the company.
That's the hard part. Everybody looks at the stock price as an indicator of right or wrong.
Hey, I heard about this Shiba Inu thing.
Yes.
You know who I heard about it from? I heard about it from Nicole, my girlfriend, at 8:45 last night, who doesn't know anything about money, and she was asking me about it. And she's like, what do you think about this? I'm like, that's like asking me what I think about a leprechaun.
I'm the leprechaun. I'm the leprechaun. What's that from?
Oh my God. I kind of know, but I can't.
Come on.
It's I can't remember. It's
Wayne's World.
Oh, right.
I'm the leprechaun. Do you know the Savior? No? Oh, it's a great movie.
Paul, I should have known because the comments people write is everything you ever say is just from Wayne's World. It's
no,
like the only movie.
Say Dumb and Dumber, Wayne's World, Ace Ventura.
Yeah. Well, all right, folks. If we sound stupid, that's great. We have our process of investing. We're very, we don't lose sleep over investments. We love when they go down. Not like this Lucid crash.
You should focus on what your process is going to be for long periods of time. That's all you should care about. And over long periods of time, you will do well. Go look at Intel, Cisco, Amazon, and what was the one somebody told me the other day that was even more ridiculous? Was it Booking.com? Went from $990 a share down to $6, and now it's $2,500 a share.
It can happen.
$990 a share down to $6 a share. Not $600, not $60, $6. And you're telling me you would have kept it all the way to $6, saying, nope, I believe in Booking.com. In order to believe in that, you'd have to understand the numbers. And you weren't going to understand the numbers. That's why you bought it at $990 and $500. And you bought it at $300, went to $990, and said, see, I was right. And it went to $6. And you would have sold it. You wouldn't have sold it at $500 when it was down from $990 to $500. You wouldn't have sold it at $300. You would have lost a ton of money on it. And you would have sold it somewhere a lot lower and said, oh my gosh, I was wrong. Nope.
That's our take. Be careful with Lucid. No clue about the future. It looks like a great car, but not enough to put your hard-earned money in at the moment, is our opinion.
Oh, can we make one more comment about this? So if you're going to enter this market and compete with Tesla, don't you think you would want to have an entry-level cost car?
Yeah, what does it cost?
The starting price of their car is $70,000, and it goes up to $170,000. So Tesla's selling a car at $35,000. It's a beautiful car, don't get me wrong. But if you're going to compete with, I mean, you're going to start at $70,000. Toyota's going to come out with a car. Audi's coming out with cars, all less than $70,000.
I saw that too.
Where are you going here with this?
If you want to see what's going to the moon, follow us on Instagram because my dog pictures on Instagram are going to the moon. They're the most invaluable. You can buy an NFT of my dog pictures.
That's true. You're selling
$5 million.
Yeah, you're selling them.
Each dog. That's four of them. $20 million gets you all four.
That's it.
Yeah.
You would really sell.
They're getting older, so it might be worth some money.
Yeah. True. Time to set them out the pasture.
Yeah.
Like old Yeller.
Old Yeller.
If you want the software behind Paul and this resonates with you, join our community. You can talk like us, invest like us, and not lose sleep over these ridiculous cars. So that's our take. Final thumbs up. See you in the next video. Complain in the comments below. We'll get them. See you.